All right, good morning, good afternoon, good evening, wherever you are. I hope you're all doing well. Um, it's Friday, last day of the week. I personally just woke up. Um, I was doing some stuff over the evening, so I apologize for my voice because um, I was actually building something. I was trying to build something. I'm learning. You never stop learning. So I was learning overnight. So I woke up exactly at 1 for some reason. And I woke up because I care about you. Okay, if you're watching me, I woke up because I care about you. And I want you to do well in your trading. If not, I would have continued to sleep because I didn't have any sleep. Okay, let's continue with the dollar index as usual. Yesterday we had a very good price action, which is the trade that I shared with you during the New York session. Give me 2 seconds. Let me grab my glasses. Let me put my glasses on. Okay, I'm back. I need to be able to see, because if I'm using the other screen, which when I'm doing the live sessions I use the smaller screen. When I'm using the smaller screen, I can see properly, so I have to use my glasses. So yeah, as I was saying, we had a wonderful trade yesterday. Dollar index, after rejecting that pullback, and I mentioned that during the purple time, you want to look for a fair value gap to form, an order block to form, and then take you up there. Okay, so on euro, that actually happened right here. Okay, there you go. So price rejected that area and then created a gap over here, pulled back to it, and then went down, created an order block here, and then it went down. This is the 15 minutes time frame, but if you go into the 5, you see we created a gap. So this would have been an entry for you. This gap here could also have been an entry. This one here could also have been an entry. Okay, so when we have a directional bias during that time of the day, any gap, any order block, right, on the 5 minutes or on the 15 minutes, it's likely going to work, because that time of the day. Now let me talk a little bit about time of the day. So you will understand why. And this is why personally I feel like trading currencies is like a cheat code. You have a cheat code in trading currencies. You don't have that in trading the crypto market. You don't have that. Now the cheat code is there are specific things that happen at specific time of the day. Okay, and it repeats itself almost every day. When I say almost every day, literally almost every day. Okay, there are specific things that happens at specific times of the day that repeats itself almost every day. I've shaded my time zone for a reason. Now, during the London session, there's always going to be a move. That move that move will be between 8 in the morning and 10. There's going to be a move every single day. There's going to be a move between 8 and 10. Then there's also going to be another move between 2 and 5. I'm repeating it again. There's going to be a move between 8 and 10, and there's going to be another move between 2 and 5. These two times that I've just given is called the delivery window. The delivery window. What is the delivery window? The delivery window is the time of the day that the market will deliver price, whether you like it or yes. Price will be delivered whether you like it or yes. So what does that mean? It means that price will move aggressively in a specific direction during that delivery window. That is the time that the algorithm is designed to move price towards levels. So all you need is to understand where the market is supposed to go for the day. Where is the market going for the day? Because wherever the market is going for the day, during that time, that is when price will move. Now, the same time can be used for reversals. So if price is going to reverse, they will use that same time because it's a delivery. They will use that same time. So most of the time reversals, if you look on your chart, you will see that reversals happens within this red or within this purple. Not all the time, but most of the time, majority of the time, that's what will happen. That is why yesterday I was talking about that particular time. Now you can bring it to 1. It's all fine if you want to start at 1. But the main time that the move will happen is 2. But sometimes, that's why I said most of the time, because sometimes they can move it at 1. Why 1? Because during that 1, the news event comes in at 1:30. So they can use the news event in that one, between 1 and 2 between the 1 and 2 time period. They can use that news event to move price, and then during the 2 they can pull back and then continue, or they can use the 2 to reverse price. Depends on where price is. Okay, so the reason why I give you those specific time is because of that. That is one aspect of it. The other aspect of it is that if you believe, okay, this is now touching on belief. If you believe that the algorithm is delivered, I'm sorry, the algorithm is controlled, right, and it's predictable, then it must have a memory. Okay, listen to this part closely. It must have a memory. Now, what is a memory? Example, if I ask you, what did you do last year, a year ago today, which is 23rd May 2024. If I ask you, what did you do? There's a high probability, or there's a high chance that you won't remember what you did. There's a high probability you will not remember what you did a year ago, exactly a year ago today. Why? Because during that period, there was nothing significant happening that day. Hence, there is not enough emotional attachment to that particular day, which is exactly a year ago today. There is no emotional attachment to a day a year ago today, right? And since there's no emotional attachment, the memories are still there, but you are likely not going to remember because you didn't have any huge emotional attachment to that day. But if I was to ask you, same question, what did you do last year Christmas? Okay, last year Christmas. Now, there's a high probability that you will remember last year what you did during Christmas. Why? Because there was a lot of emotional attachment to that particular day. Okay, you did certain things that you will remember more than an average day. So that time of the year holds some kind of energy that you can use to remember what you did that day. Okay, it holds some kind of energy that can help you remember what you did that day. Now bring it to the market. The reason why time is important is because during certain times of the day, just as I've described, there is 2 types of memories. There's one that is emotionally charged that can be remembered by the algorithm, and then there's one that is less emotionally charged that will not be remembered. So the 2 times that I've given you, the 8 to 10 and then the 2 to 5, those are 2 times that you can compare it to like Christmas for the market, where the algorithm will remember, because during that time there's a lot of traders that are trading, one, and there's also a lot of emotions running during that time. Why? Again, because when traders are trading, they tend to be emotional. So that time window is emotionally charged. So the algorithm will want to move. Hence, anything that happens during that time will be remembered. So if you've noticed, I've been bringing your attention to the New York session gaps, the New York session price action, because New York session price action is like, I don't know, Christmas, and then London session price action, it's like Easter. Okay, that's the magnitude. That is the magnitude of how important these two times are. So Christmas is more celebrated than Easter. A lot of things happen during the Christmas period than it happens in the Easter period. Now, all that I'm trying to do is to bring your awareness to something. Okay, today forget that analysis. I'm trying to teach you something. Why I put emphasis on time or certain things that is happening during that time. Okay, so during that New York session, all that happens in there is so important. It does not matter whether it's an auto block, whether it's a fair value gap, it's emotionally charged. It's gonna work if you have the directional bias. Aside or outside that time, the chances of an auto block working, the chances of fair value gap working reduces. Okay, it reduces because those times will be compared to the normal average day. Okay, so you might do something special and then you might remember, and then you might do something that you might never ever remember. So the same thing goes for the algorithm. During those times, outside the time window that are given, certain things happen. For example, before that 8 a.m., that's my time, London, there's always going to be some form of manipulation, but not all the time. But it can happen. Okay, that's a stop hand where we run for either Asian high or Asian low. It doesn't happen all the time. Hence, it's not a signature in price that you can actually depend on. Sometimes it happens, sometimes it doesn't. Okay. And then you also have the from 5 p.m. going price action. From 5 p.m. going, anything that is happening in there is not relevant because the algorithm will not remember them. Okay, it will not remember them. So this is why time comes first before price. That's why yesterday I was saying wait for that too. So now you understand why. Okay, you understand why I put emphasis is because of memory, or quote unquote ICT calls them PD arrays. Is because of the PD arrays that will form during that time of the day. So it doesn't matter if you have a price level that has been there for ages. I think, let me go to the lower time frame. Okay, let's say you're looking at price like this. Okay, you're looking at price like this, and then price is coming down. Or let's use here, when price was coming down. Inside this move here, the most important move or the important level is what happened during a London session and a New York session in here. So what you do as price is dropping is to find is to find what happened during London during that move. So we do have a lot of fair value gaps here. So we have this one. Okay. We also have during that time of the day, and then we also have this one, and then we have a small one in here which I'll highlight. So you can say this particular day, which is the Thursday, 10th of April, okay, Thursday 10th of April, there was a lot of emotional attachment to the day because London shot up, New York also shot up. So in future, if price is coming back down that particular day, all the gaps that was created during that day is highly going to be respected because price never price never pulled back to them. Okay, price never pulled back to them. I'm sharing one of the things that I've discovered that has, transformed everything. Okay, for free because I care about you. Maybe I had a dream that I have to share it. So there you go. Now, if I was to release, you will find out price reacted from these levels. So that's the New York one. This one. There's another one here. This one. And then highlight that. That's an auto block. That the first candle traded above. That one too. Okay. But the whole of that day, okay, there was a big energy that was derived because you can see it. Lots of traders would have been emotional today, that particular day. So all the gaps that happened during that day in future will be respected. So there's one here. This is also waiting in future. When you come back here, you will see it. Right? Here, this is a New York session price action. We come back to that here. It actually dipped into the small little one in here on the lower time frame. This is London. This happened here. That's the New York price action. And I think here, that's the New York price action. Okay, so pay attention to New York because that is where everything happens. Okay, everything is happening in New York. I think now you understand why ICT did put a lot of emphasis to that. He did not go into details as to why. I am telling you the why because I like to know why. You can't just tell me to trade New York and don't tell me why, but I'm telling you the why. When you understand the why, you don't have any excuse. But if you don't understand the why, you have every excuse in the world. Okay? So the why is because during that time, that is when memory, when I say memory, that is when the algorithm takes in information that are relevant as price keeps going. Okay? So hopefully you understand and you keep this somewhere within yourself. And this is why I recommend you trade currencies as well, because this that I'm sharing with you does not happen in cryptos. Okay, it does not happen in cryptos. It only happens in currencies, it happens in indices, it happens in futures, but it doesn't happen in cryptos. So cryptos price does not respect the New York session price action. Occasionally it might, but most of the time it won't. Okay, most of the time it won't. So it's very, very important that you pay attention to whatever is happening during the New York time. Okay, so hopefully I've given you something important today to go with. Now back to us. I think dollar index eventually went and ran the low, and that is the aftermath of that run of the low. It's just a rejection below that low, and for now it looks like it's kind of reversing, but I think it will continue going down going into next week. We might pull back, okay, because this has now changed the state of delivery, so we can pull back and then go down. So what we will do next week is highlight this up candle and then the high. This up candle and the high that is going to be where the high of next week is likely going to form. And then where is it going to go? It's going to go here. I've already highlighted where it's going to go. On the lower time frame, it's a New York session fair value gap. That is where it's going to go. And then from there, you come to this one, then the equal low. So let me highlight that one too. And then the equal low. So 98.72, 98.59, 98.29, then 98.24, and ultimately 97.91. That is where price is gonna go going forward. All right. Okay, so with that, euro will resume going up. The weekly perspective, we might come first of all above this high, that high, yeah, then that fair value gap, so 1.1425, then this definitely happened in New York. You can see down there, if you look at the date, is Tuesday 22nd April at 2 p.m. Okay, so that's an important time. So this gap is very, very important. They will trade to that going into next week. Okay, so next week we are looking for a buy on euro to continue going up, but it can pull back. Okay, it can pull back. Power of 3, market opens, it will drop first and then it rallies. So next week, if the market opens and it drops first, then that will be your clue that will be expanding up to go up here. I like the fact that we've now gone through this volume imbalance. Ultimately, we'll go and make a new high. Okay, Then British pound is already screaming higher, so we will look for a buy on this as well. I think as it stands, we have some clean equal highs in here. Let me double check over here. And see if there's anything that requires our attention for price to trade to. Yeah, so in here, that's a relevant gap. So that's where price is gonna go. Next week, we'll be looking for price to trade there as a target. So if we pull back, then we go up there. I think yesterday, the trade that I shared, I was looking for them to drop this one too. It didn't drop as much as the euro. It didn't quite get there. It would have been nice. And then we look for the rejection. Anyway, so that's the forecast. I don't think you should do anything today. The day is done. They've manipulated up and down. Price is not gonna go anywhere again unless someone somewhere steps in with some news event. If not, the day is done. So don't chase anything, don't do anything, just sit on your hands. So all that I'm saying is for next week. All right. Okay. And next week, let me go to the daily time frame. Let me go to the H4. Next week, we'll pay attention to here. On Monday, we pay attention to here and then here. This equal low. They can manipulate to this and go up, or they will come for these lows before going up. Okay. What else? I think that's that for the currencies. The rest we'll look at them next week. Let's look at gold. I think yesterday I talked about gold coming up here from this order block. They did come and dip deep into the gap again. Right, they came back into the gap again and then rejected. So there we go. We've reached the target. Now if you took it, stops you out, no problem. Here again, New York session. Notice this down candle that formed. I've given you the you can call it a secret. So now you don't have any excuse. If you take a trade and it stops you out, New York session, gaps, fair value gaps, auto blocks, buy them. Okay. This happened outside that. Okay. So this is a high probability that they might not work. It might not that it won't work. It's because of the time it formed. Okay, so this is why sometimes if you've been trading ICT stuff, you see certain certain order blocks works and certain order blocks don't work. Now you know why. Okay, the reason is time, memory. Let me see if I can go a little bit deeper into that one too. Okay, so give me a second. I have some notes here. Okay. So we have something called temporal memory. Okay, temporal memory. That is the memory that forms outside the time. Okay, temporal memory that forms outside the time. Those temporal memories sometimes can work. Most of the time, it might not work. It could be used to engineer liquidity. Okay, I've said enough. Temporal memory, I'll just talk about that one. So temporal memory is when a gap, an order block, a low, okay, forms outside the time that I talked about. Those things will be used against all the smart money traders. So the algorithm is not designed only to go against the quote unquote those that use retail logic, but it also goes against those that use smart money concept. Okay, so if a fair value gap forms outside the time that I've given, that is a temporal memory. It can work, but most of the time they will trade through them, so that any smart money trader that thinks that is a gap, they will buy it or they will sell it, and then they will be in a drawdown, because that's a temporal memory. They can use it to in a way bring in liquidity. So if I see a gap and I buy it and it goes against me, that's liquidity. They're using it to grab more liquidity because that gap formed in a time that is not relevant to the algorithm as a memory. So then they will go beyond the gap, and then sometimes if there is a swing low, they'll go for that low. The same thing with an auto block. If there's an auto block during that time, they are likely gonna run that and then go up. But if it happens during the time, that is not going to happen. If it happens, that is a reversal. So when you have example price action happening in New York session, a gap forming in New York session, an order block forming in New York session, and price trades through them. If price is able to trade through that, that is your reversal. That is when a reversal is happening. The same thing in London. When London creates an order block and it fails the time that I gave you, if it fails, that is your true reversal, because that's not supposed to happen. Okay, so I think I've given you too much for today. Anyway, so here, this one stops out. Why? Because of time of the day, right? And then guess what it goes into? This down candle that formed in New York, and then reject. Notice it did not go far because it was just running that auto block here, and then created this one here. Or if I was to drop down to the lower time frame, this down candle, this one, and then they never went back below it again, and that's why price shot up. So now it's hindsight, but believe me, you will start seeing them now that I've brought your awareness to it. you start seeing them. So when you have an auto block and it fails, check the time of the day that it formed. Likely it didn't form at a time that was relevant. Okay, now I'm not saying it's not going to work, don't get me wrong. That's not what I'm saying. I'm saying there's a high probability it might not work. Okay, so you can take them, but just know that it's a high probability it might not work. Okay, so gold, we are resuming going up, and I like that. Next week we will go up one more time to go and attack this high. On a daily, we might struggle a little bit here, but ultimately we'll trade through it. So Monday, I like the fact that we have this down candle there. So I'm not expecting any huge manipulation to the downside first before we go up. I would just want to see them maybe drop into I think London has created a nice gap here. Okay, and then they're moving in the 1 o'clock. So this one, now I think I'll leave that one because I don't want to get into trouble teaching you too much. Okay, so these two gaps, Monday, those are the levels you're going to use for a continuation to the upside. Right? Now some of this stuff I would have wanted to share it in the private, not on X. I was waiting for us to go into the portal so that I can express myself, because there's way deeper stuff to learn, but I'm trying to share as much as I can. Anyway, so this gap here, right, these two gaps, you're gonna use that for a continuation, because the down candle here will hold price, likely gonna hold price to continue going up, because I think this is the low of the month of May, and we are gonna come back up here. Okay, crude oil, nice trade that I got into. I think yesterday I spoke about it. You're selling this gap, put your stop loss up here, and then expect a continuation to the downside to this one. So now you know why. Okay, so when I start pointing to it, you know why. Now let me say this. Now that I've brought your attention to it, you can never forget it. It's impossible to unsee it. So when you come onto the charts and I start pointing to it, you know why I'm doing what I'm doing. And that is why I prefer education. Okay, I prefer everybody to be educated, to understand. I'm not a fan of tell me where price is going and I'll trade it. What if it doesn't go there? Right? I'm not a fan of giving you just a trade idea. I can do that, but I'm not a fan of it, because you need to know why. Because I am here, I'm a human, I'm not a robot. So I have got needs, I got a life. What if I'm not here tomorrow? Right? What if I'm not here tomorrow? What are you gonna do? Okay, that's why I like to impact the knowledge that I have in my head to you, so that when I'm not here, you can also do the same thing, rather than me telling you, okay, today price is gonna go here, or this is the trade idea, let's all take it, and then I'll not give you anything as to why. Okay, so going forward, when I point, you know exactly why I'm pointing. When I say something, you know exactly why I'm saying it. Okay, all right, enough. I think I had a good sleep, so my energy is up. So yeah, we are looking for continuation to the downside to that particular level, this one. That is why price is so specific, because it's designed to be like that, precision. So it will get here. If we trade through that, then we come up here, then we go for that high. This gap happened when in London, so that one will stay open till we get to that one. If we trade through that, then we go higher. It's that simple. And then ES, I think I already told you we'll be going down. Yesterday I actually took a hit. I was selling this one here. I sold that. It went down a little bit. I was looking for just a move to this auto block that happened pre New York morning session, and then they stopped me up. But I knew why, because this gap here was like calling for price to be traded to, so they manipulated into it and then eventually broke down. But when it broke down, I was not in front of the screen, so I couldn't catch the trade. But eventually it went to where I told you it's gonna go, right here. Okay, so this has now given us another reason or confirmation that this is the high and we are not coming back there. We will continue going down. So our next target will be somewhere here. We might experience a pullback inside this volume imbalance. Okay, we might experience a pullback inside that volume imbalance, but ultimately we will trade through it and then come here. Now, which level? Let's zoom in. It's gonna come right here. This candle's low to this candle's high. That's a inverted gap, right? It was meant to be going down. They traded through it. So that is exactly where price is coming from. Where we are, 5563, 5517. That is the drawn liquidity. So next week, if we pull back, which is what you should be expecting, they've taken out the previous week high, so they will take out a low, this low, that low. Preferably we go up first. So when the market opens next week, we don't want it to trade down straight away. It's good because you expect lower prices, but we will not get an entry. Okay, it's good, but we will not get an entry. So preferably we want it to open and go up first. If it goes up first, then we can look for a trade idea, a sell, to come back down. Okay, so that is that. Now I've spent a lot of time trying to educate you today, so I'm gonna be very, very quick with the crypto market. We've made an all-time high again yesterday and we are rejecting. Now remember I said this gap, it's likely going to be traded to. All we need is for this week to close. We don't want it to come back and reject. It's good that it's pulling back, but we don't want it to reject and become a previous week rate. We don't want that. So with the rejection happening right now, we need to sustain this gap. Price needs to sustain this gap so that we will end up closing above the previous week. Then we will have this candle, the low, and this low as a prime suspect for next month. If we don't get that and we reject, something else might be happening. Okay, something else might be happening. So we want the Bitcoin to stay this week, to stay like this, and this gap is likely going to be traded to next month. Solana, we couldn't get there. Same thing. We want the weekly candle to close, especially the daily one. Okay, we don't want it to reject and close below the previous day's low. No, that will not be a good thing. But on the monthly time frame, when the month closes, because it will be a new fresh candle, so we have to reanalyze everything. If we end up closing above this, that gap here, this one, can still be traded to form the low of the month, and then we go up again. Okay, so crucial that this week we close bullish. We don't want it to close bearish, because if it closes bearish, next week can also close bearish and trade through this gap. So Ethereum, same thing. So the narrative for Bitcoin, it goes for all the other pairs. Okay, Bitcoin is king. AI still struggling. We've managed to close above it, so that's a good thing. I think the daily has closed above it, so that's a positive sign that we will resume going up. So this has now created a gap here, so that one needs to hold, and then I think we will get a momentum. We might see this outperforming the others, where if Bitcoin holds the gap on a daily and then even go in a consolidation, this might shoot up to go and trade through this gap. I'm sorry, the resistance level. Hype has also made a new all-time high. Amazing. Now, a month ago, it was like, where the heck are we going to? Now we are all-time high. Okay. So again, the week, very important. I think this one is leading in terms of strength. So if it creates a gap, it might pull back into it and then go up. So next week's candle, I'll prefer a down candle as a reaccumulation, because we are overdue. And that's the last time we had a down candle. We've had 1, 2, 3, 4 up candles. So next week might give us a down candle, a reaccumulation candle. XRP, I don't like what it's doing, but the OTE level is still there. So if Bitcoin does not shoot up, they can come back to this OTE level and then still go up. Whatever happens, we are looking for higher prices. Tatsuo, that same level, OTE level, that still holds. We want them to stay above that and then take us up. Now, looking at how the month is trading, we've got 1 week more to go. If we don't go up, this will become an inside candle. Next month, it's likely gonna take out this low here and then probably reject and come and take out this high rather. Okay, because this, I think this one is protected for now. So if this month ends like this, they might come back next month, take out this low and then start shooting up. I was surprised to see this overnight because I was still awake. I was surprised to see it. I wanted them to come for this low, and it's not too late for that to happen. We can still come there before going up. So just be aware, okay, that we can still come for this low and go up probably next month, because we're gonna open a new month. It's gonna manipulate and it's gonna go up. It's taking out this low. So if the next one takes out this, that will give us the 3 Indian drive. 1, 2, or high resistance. Actually, it's not 3 Indian drive, it's high resistance. And as soon as we tap into this, price will reject and then go up again. Okay, so that's pretty much it for now. I've gone over my time, 2 minutes, 3 minutes. It's fine, because I gave you something valuable today. And that's why, personally, trading cryptos to trading currencies all day. And then cryptos 1 or 2. Because currencies, you can predict. Okay? You can predict what's going to happen. Cryptos, maybe. But you have to trade it long time. You can't trade cryptos, day trade, scalp cryptos. That's dangerous game. But you can do that with currencies because it's easy. All right. Until then, I'll see you all on Monday. Take care of yourself. Practice what I said. Go through your chart and then see for yourself. And I'll see you on Monday.